how did you enjoy your dinner, your meal? Good. Okay. All right. So I'm going to turn it over to Alfie. He'll speak for a few minutes, and then he'll also introduce Tom Siomades. But thanks again for being here.
That was one of the quickest ones she's ever done. Something's wrong. Well, we picked the right day. I'm glad we didn't have this yesterday, right? Timing's everything. So, Tom Siomades, he's a good friend of mine. How many in here have already seen Tom speak a couple times? Yeah, a lot. Oh, Tom, you better have your A game, brother. New material, yes. You can't take the old stuff. Leave that back. But anyway, it's been a little bit of a trying year so far. We've had tariffs and just a lot of markets up, markets down. So we're going to be able to take some questions from everybody. He's going to do his little spiel up here, talk a little bit, tell you a little bit of some jokes about West Point and everything. He is a West Point grad. He's CFA, Chartered Financial Analyst, so he's a very smart guy. But you know what I love about him? He's smart, but he talks our language. He brings it down when he talks to me, right? You got to do that with me. But so let's bring him up, and then come on up, Tom. Give him a hand. You can have this one, or you can have that one, whichever. That one works.
Can everybody hear me okay? Okay, so I think I'll go full on academic mode. Alfie promised me I could sing. That's why he rented the... No, you don't want to hear that. Whatever's on your plate that hasn't curled up will surely curl up when I sing. Anyway, so I'm Tom Siomades. I live... and I like to walk around, so... All right, okay. This is going to be a challenge standing in one place. I'm kind of like a nervous pacer, but anyway, I'm Tom Siomades. I live outside of Kansas City in a place called Leawood. If people know where that is, it's right on the border with Missouri. Nice little community. I got a wife. We've been married almost 40 years now. A couple of kids, a daughter who's 24, and a son who's 20, going to be 21 in July. Dog, a cat, and a lizard that my son left when he went off to school. Anyway, so that's the quick and dirty on me. So let's talk about what's going on in the markets, and we can, have a discussion after. But I'd like to get through the slides. So I think it's important to understand what's going on. You have to have a sense of sort of history and put things in perspective. Because a lot of times we get caught up in the moment and all we think about is, oh my God, look at this is terrible, it's been quiet. We've had crises since God knows when. This is going back to 1970, but look at all the different things that happened since 1970. Financial crisis, wars, recessions, all kinds of stuff has happened. So, what I'm trying to get at is events happen, it's just one of those things, and markets react to those events, right? But what I would leave you with, more than anything, is look at the way that chart is moving. It's always pushing up and to the right. It always ends up higher than it was before, okay? And that's kind of one of the miracles of the stock market in a lot of ways, and we'll talk about the markets in general. When I refer to them, I'm usually talking about the stock market. It's a upwardly biased mechanism. You would not invest in the stock market if you thought you were going to lose money, right? That's what Las Vegas is for, right? So the market, despite all the ups and downs, and I can imagine people felt pretty low, just like they're doing these days about what's going on out there and confused, but we still managed to get through it. One thing I find interesting, bless you, one thing I find interesting, and they haven't kept track of this as long, but there's this thing called the Policy and Trade Uncertainty Index. And as you well know, when Trump came out with his tariff situation, and the big sandwich board that said this is how much these guys charge us and this is how much we're going to charge them. We haven't had a spike like that in trade since the only other time since this thing been compiled was in COVID, right? And that was because everybody shut down. Everybody, you remember the stories about the ships out in the ocean that were waiting to dock and all that stuff. So that was a unique time, but no one's ever kind of come up to it and said, hey, you know what? Let's upend world trade. Okay? Now, I've got a perspective on this, again, with history. It's sort of important to remember, like, the reason why we have this trade deficit, if you will, and why these countries are doing what they're doing to us. When World War II ended, if you guys remember, the world got torn into two parts, right? There was the Soviet bloc, and then there was the West, right? Trade was a huge economic tool, policy tool that we could use, an economic tool with which to win friends, right, and influence people, okay? So think about this. I'll give you a quick analogy. You got two bars, right, one on each corner. One bar has happy hour, drink specials, ladies' nights, you know, whatever, the whole shebang, right? It's a fun place to go. The other bar across the street sells one kind of beer, it closes at 4 o'clock in the afternoon, and is never open on Saturdays, okay? That was the Soviet Union bar, right? Ours was the other one. So everybody came to our bar. We tried to encourage that, right? And so we created a trading structure where we wanted to have countries depend on us and export to us so they could grow, they could get prosperous, and they could keep the Soviet wolf at bay, right? The problem with that is after the Soviet Union collapsed in the 90s, guess what? We didn't have to have that same status quo again, right? There was nobody to compete against. But these countries, we kept on doing it because the people in this country were making money, you know, globalization and all that other stuff at the expense of the middle class, and so we left that in place. And that's kind of where we are right now. It's like anybody coming in from the outside would say, why would a country charge us 30% to sell our stuff in their country and we wouldn't charge them anything to sell in ours? It's back-ass word, but the fact of it is, that's how the system is, and that's how the people that are getting rich from the system don't want it to change. So we've got this huge policy change, uncertainty, and that's kind of what started driving the markets ever since Trump came into office. So who do we trade with? Okay, I would say the bulk of our map is red and green. Red being Canada, green is Mexico. Okay, some from China, some from Japan. I guess down here in Florida, you guys are trade more with Japan than anybody else. But Mexico, for our sakes, it's Mexico and Canada. Two biggest trading partners, right? How does that impact them if you look at it? Like if you look at how much we send to Canada and take in from Mexico, you notice the two blue lines, guess what? Those are Canada and Mexico, okay? Those are our two most important partners. If you look at the red line, that's how much China sends to us versus how much of their GDP we're responsible for. So think about it. They send a lot of stuff to us and they take very little of our stuff. So they're not a good trading partner, where I would say Mexico and Canada are, and I think that's probably where we need to make our deals first before we start fiddle-fuddling around with China. Okay, tariffs, right? We heard a lot of talk about tariffs. And one of the things that I'd heard that tariffs were potentially going to be used to get rid of income taxes. Folks, it's not going to happen. The last time tariffs had any kind of meaningful impact was in the 1800s. Okay, we don't really make that much money from tariffs, but I would argue let's get rid of them on both sides and just trade fairly. Let us sell our stuff to your country. We'll buy your stuff. If you make a better product, great, we'll buy it. If not, you know, we don't need our products being curtailed. But if you can see, I mean, you know, tariffs dropped down to nearly nothing back in the the 1950s, and guess remember what I told you guys, right, about the two bars, right? That was what happened around 1950. That was when the start of the Cold War, right? So we basically opened our gates, let everybody come in here and sell their stuff so they wouldn't be tempted to go trade with the Soviets. Okay, what is a problem for us is our government continues to spend, okay? Everyone wants to talk about the trade stuff and all the turmoil that's causing. You know, it's causing a lot of turmoil. $36 trillion in debt, folks. And what do we got to show for it? Nothing. Half the country smoking weed, gambling, or watching porno on their phones. And we're complaining about trade. Really? Let's do something about this, because you know what they didn't do with $36 trillion in debt? They didn't fix Social Security. They didn't fix Medicare. We got nothing for that money. And those are the things that they keep hammering us with and keep saying to us, hey, guess what? Well, Social Security is going to be broke in 5 years. We're going to, no. This is a time when we need to start telling people, stop wasting our money on stupid stuff that we don't need and hampering our economy and our future generations because you guys have a spending problem and can't fix it. We all know how to budget at home. So that's really what the bigger problem, in my opinion, is. It isn't this trade stuff that'll reset. These countries will come back to the table. They'll say, hey, you know what? I know we had it good. Let's cut a better deal. Everybody's going to be happy. But this does not go away regardless of what the tariffs do. Okay? Alrighty. Recessions, right? Recession risk. Okay, I'll tell you a simple thing about recessions, as no one ever predicts them, right? I get it all buggered up, but it's kind of like the last 10 recessions were predicted with 5% accuracy or something crazy. It's the old, 5 out of 4 dentists recommend kind of. You have to have an acquired sense of humor to get that. But anyway, my point is these guys are always like Chicken Littling about the recession. And if you look at the last couple of recessions where I circled it, the predictions were like 25%. I don't know what that's like to you guys, but for me, I don't have a 35% personal recession. I either have a job or I don't. I'm at 100 or 0. Okay, so right now, they're saying the chances of a recession are like 30%. Well, I don't know what that means because you go around, people are still spending money, people are still traveling, they're doing all kinds of stuff. So, again, they predicted a recession back in 19. And did it happen? I guess if technically it did, but then they didn't count it. So does that even matter? But needless to say, there's elevated concerns that we may have a recession. We'll see. Okay. Sentiment, right? Let's talk about sentiment. So there's two kind of things that are out there. There's hard data and there's soft data, right? Soft data is basically all the ways we feel about things, and then hard data is the actual manifestation of those things. So hard data being GDP, unemployment, those type of things, right? Soft data is consumer sentiment, these manufacturing surveys and all that kind of stuff. Those are all soft data, right? So right now, the soft data is not really good, even though the other hard data, jobs, for example, or GDP are fairly solid. So we're at a place right now that sort of, I think it's delicate, right? Because the world's always ending. I don't know if folks ever noticed that. Okay, I don't even know how time stays in business because they literally should have been wiped off the face of the earth, like after any one of these numerous horrible issues. But if I were to say to you, for like the last 2 months, things are horrible. These tariffs are going to raise your prices. Inflation is never going to go away. Wouldn't you feel like crap too? I would, right? So then that's why the soft data, that's why we keep getting all this data that keeps on saying, consumers feel horrible. Because we're, in the best of times, folks, quick sort of, percentage. The best of times, bad news is like 85% of what you get. When times are tough, it's like 99.9%. Because we all know bad news sells. And that's kind of what's going on with, we're being basically, what I'm concerned about is we're emotionally being beaten into a recession. That's what I'm trying to get to. Because there is such a thing that's called self-fulfilling prophecy, where if you believe something enough, it'll happen. And if we're being told constantly that we're on the verge of a recession, it's not going to be a surprise to us when we wake up one day and they say, hey, we've got a recession. So, okay. So what's not helping the case is, inflation is still elevated. I mean, it's come down the past 2 months, which is great. Hopefully it keeps coming down. But, we've had this prolonged period of inflation since, 2021. And it's been tough, right? It's been tough. And it's been tough on everybody. And it wears on you because, the most visible places you see it was when you go to the grocery store or when you drive by a gas station. So we're still elevated. And because of that, right now, the Fed has kept interest rates higher than they normally would. So that said, people are now beginning to default on their loans, which is, another sign That's more hardish data than the other ones, right? It's like inflation's high, more of our money is getting taken away from us, and people are beginning to default on their loans. If you notice, there is one line where it dropped precipitously from like 2000 down, and it's going to start picking up again. That's student loans. That party's over, thank God. But yeah, so for the most part, most loans are, beginning to tick up because, higher interest rates wear on people. Bad news wears on people, and eventually, people start rolling over. So I think this is one of those things that bears watching. Okay. All right. So you guys remember the whole yield curve inversion? Is anybody familiar with any of that? It basically says that when longer-term rates drop below short-term rates, that's a signal for a recession. Well, we've had that going on for a long time, and now they finally reverted back to being normal, and we didn't have a recession, okay? It was one of those, predictors of recession that never happened. And, the logic is simple, right? I want to be paid more to invest my money for a longer period of time, right? Versus lending money for somebody for like 6 months. I want more compensation for the longer period. So that's another one that kind of flipped it. Signaled recession, never happened. We're back kind of looking normal again. We have a lot of money in the bank, believe it or not. There's a ton of money on the sidelines that's sitting there, right? So this is another argument that bodes well for when you start seeing trade deals, when the budget comes through and there's some deregulation, and you start seeing interest rates come down. There's a ton of cash sitting on the sidelines that's available to jump into the market, which will spur the market forward again. Okay, so the reason we're not feeling it as much is because everyone's like, I don't know, folks here, like, does anyone still have a mortgage? Good. But, everyone has a house, and you've seen what's happened to those housing prices, right, the past few years. So we're feeling pretty flush, right? We've got money parked on the sidelines to reinvest in the stock market. Our homes have, typically that's when you have like some serious economic distress, is when home values stop dropping. We're still feeling fairly wealthy because our homes are, have appreciated or at least haven't declined. Here's an interesting one. How many folks have flown recently? Okay. What's the airport? This is like, should they just change it from the airport to the zoo? Because people are traveling, right? So I don't want to hear it, right? I don't want to hear the whining about how the economy is terrible. It's like, well, what are you doing flying? It's the most superfluous thing you can do, is go on a vacation. If you're truly hurting and don't have money and the economy is so crappy and you feel so bad and the government's tanking everything and this and that, why are you flying? We're in pace up there, that top line. We're in pace to go even higher than we were last year, which was a record year. So that's kind of my proxy, because I travel a lot to do this kind of stuff, right? And I talk to a lot of folks, and I hear this stuff, and then I'm thinking, yesterday, for example, I'm getting off the plane, and I'm walking at a D terminal there in Fort Myers, and the line was like all the way up that ramp, almost up to the ticket counters where the escalators come up. Are those people hurting? No, but that doesn't sound like a recession to me. Okay, so we worry about things, right? When we're in periods of stress, what happens is your fine motor skills break down, you get tunnel vision, you stop thinking clearly, and instead of our personal lives becoming sort of like a fine-tuned dimmer, it's an on-off switch. Either things are going to be horrible, or things are going to be great. Most of the time, when we're fearful, things are going to be horrible. So we constantly think about those two little pedestals off right here. Okay, we worry about the fact that, this is it. This is the big one. How many guys remember Sanford and Son? It's like, this is the big one. I'm coming. Well, yes, the market can go down 20 to 40%. It's happened before, okay? It'll happen again. Surprise. But the fact of it is, look at all the times it's green. And if we sit around and we allow our fears to take hold and we don't, stick to our plan and we panic, we miss out on that mountain of green, okay? 75% of the time, the market is up. It's a winning proposition. How many guys are in the Baseball Hall of Fame that hit 750? Right? I think Ted Williams is the highest lifetime batting average, and he's barely over 400. That's still a losing percentage. But the fact of it is, you're going to win 75% of the time. And if you have a plan, you should stick to it. I'm not saying you should have all your stuff 100% in the stock market, and we'll talk about, you know, other things that you could be doing. But this particular thing, the one that's the most visible, the one that you see every day, that's the one that you know, it's a winning proposition. And you saw that first chart I showed you, the mountain chart, where you had all those crises and things going on. Hey, those things all went on during the same time, and yet the market won 75% of the time. Okay. Don't get used to 20% markets. That's the other thing that's kind of happened the past couple of years. In 2023, we had a plus 20% year in the S&P. Last year, we had 20% in the S&P. Traditionally, should be somewhere between 7 to 9% a year, not 20. So people got spoiled. And the folks, I don't know if folks recall, but the last time we lost money was in 2022. But a year after that, the stock market was up 58%. From the low in October of 2022. So, you know, it bounces back, but you can't get used to those kind of outsized returns, right? So the past couple of years have been an anomaly where we've returned back-to-back 20% years, but don't expect it to be 3 times the normal rate, which should probably be, like I said, somewhere around between 7 and 9%. Okay, here's kind of where we are right now, just to give you a snapshot. I don't know about today, but let's just say we're down about 8 to 10% on the S&P 500, which is not great because we had a really good January, right? And typically when in January, if you have a positive January, you're going to be up 75% of the time. So 3/4 of the times when you have a really strong January, you're up that year. That's not playing out so far this year, but I'm still optimistic because as quickly as this thing tanked, it could just as quickly run back up. Like I said, it depends on a few things. You got to get the trade deals in place. You got to get a solid budget in place and lock in those tax cuts. And also, you have to you know, curb government spending. If you can get those 3 things, and regulations, if you can get those 3 things sort of aligned and pushing in the same direction, you could still turn this -10 around, and we could still. I'm still optimistic that we can end higher. I don't think. Where we are right now is about as messy as it's going to get. I don't think we're going to go down another 10% from here. But, so the likelihood of that is less. But I do think we have a lot of potential to the upside because there's a lot more positive news that can be unveiled as opposed to more negative news. Fed fund rate still too high. You guys have heard about Trump beating up on Jerome Powell. You know, listen, we've got that $36 trillion. We've got to fund that. And higher rates is not going to help that because that's just going to be more money going to interest and not going to pay down any debt. Mortgages, thankfully, none of you guys have to worry about it. But, you know, guys, I remember as a kid, my dad got a mortgage and it was like 14% in the late 70s. So I don't think 6.9 is that high, but if you're a youngster and you're looking to get a house, or, you know, one of your kids or grandkids is looking to buy a house, yeah, if they've only seen 3% mortgages their entire life, guess what? 6-7% seems high. So, and then also houses are kind of expensive. So oil, thankfully, has come down. I don't know what gas is around here, but the national average is about $3. It still needs to come down about another 75 cents, down to 2.25 or something like that. And inflation is still sticky at 2.4%. So that's kind of what the conundrum that the Fed is in, right? They want to see inflation down to about 2%, but at the same time, people are nervous, right? And we have got this big debt that we have to fund, and the longer you keep higher interest rates in place, the more pressure it puts on the economy. Okay, so this cycle of woe and grief, right, that we go through all the time, right? It's this up and down thing, and it puts you in a place where you generally make bad decisions, right? Folks remember our parents used to tell us nothing good happens after 10 o'clock, right? Well, nothing good happens when you're in a state of stress. And the media spends a lot of time stressing you out and putting you in a vulnerable place, not because they care about informing you, because how many people think there's 24 hours worth of news every day? I mean, there's maybe 15, 5 of which is weather, the other 5 is sports, right? And then something happens, right? But, there's 24-hour news channels, and regardless what your flavor of news channel is, conservative, liberal, wacko, whatever, at the end of the day, they're just trying to sell you crap. and they're trying to put you in a bad position, right? I mean, how, you know, I don't know how many My Pillows my mother-in-law bought me, but she did. She bought me a lot of My Pillows, and it's like, they're not that comfortable. But anyway, but you know, understand, right? It's entertainment, and a lot of people choose this form of entertainment, but what it does is it stresses you out. So when you're in these like emotional high and lows, you make, you know, you make bad decisions and you buy stuff you shouldn't, but you know, that permeates into other parts of your life. So I would say, try to avoid as much of that negativity. I mean, you can't do that. And I'm saying, you know, you need to become a yogi and, you know, walk around barefoot with a loincloth and, you know, burn incense all day. I'm not telling you to do that, but at least be mindful of it, right? When you see this, the BS that's being pummeled at you on a daily basis, take a deep breath, walk away, turn it off, and just understand how it is you're being manipulated, right? Because that's going to put you in a bad place, not just to buy stuff you don't need, but also potentially to make bad financial decisions too. Okay, I've shown this slide. I never get tired of showing this slide, but it's an interesting slide because there's people always think there's the two parts to everything, right? A go or no go, right? Do or don't. But there is the do nothing part, right? Just leave things be part, right? And we can talk about that in a second. But if you just look, you know, if you were smart enough to time the market, which I don't know anyone who was, and, you know, catch only the 50 best trading days, your return over that time period would be something in the neighborhood of 20%. If you were so bad that you missed the top 50 days, you'd only get 2.5%. If you did nothing, you got about 10%, which isn't horrible, right? Because you're letting that market work for you. So here's another example of where volatility, you know, can drive you crazy, because we live in this nearer period where you see all the top bars. Markets go up and down, markets go up and down. But remember I showed you that chart that showed that 75% of the time the stock market has an upward bias. Look what happens to not only does the volatility get smaller and smaller and smaller, but it also drifts above the line. So after 20 years or so, it's nigh on impossible, if you stick with it, to lose money, because the market's working for you. You're winning 75% of the time. So, okay. I know we talked a lot about the stock market, a little bit about other things, right? So how many people here have more than 2 children? Wow. Okay. Well, I've got, how about 2 or more? All right. Well, I got 2 kids, and that might come as a shock to you, but I don't love them equally. I can't say that. You know what I mean. Like, my daughter's my favorite like 90% of the time. My son's like maybe gets in there 10% of the time. And that's really, and I use that as an example because to me, like, true diversification, if you really understand it, it doesn't mean that you need to have 2 similar funds or, you know, 5 funds. It's not the number. It's you always have to have something in your portfolio that you hate. So let me say that again. True diversification means you always have something in your portfolio that you hate. Okay? Because when all the other things that you're excited about go sideways, that thing that you hate generally will be the one that like bails you out. Okay? So here's an example of all the different sectors in the markets, right? The ups and the downs, right? Do you see any consistency there? It's not just the green ones that are across the top, or just the blue ones. They're all over the place. So you would have zero way of knowing what to invest in year after year after year, because they go up and they go down. So that is an argument for you to be invested in a little bit of everything, so that way when the blue one is up one year and it's last the following year, you don't just all have blue stuff. So the importance of having a financial advisor, and Alfie and his team, and again, I say this often, and because I genuinely believe it, okay? You just spend your entire lives working and setting aside money and retiring and trying to live a hopefully stress-free life, right? How many people here go to Starbucks? Good. Okay. I don't go to Starbucks, you know why? Because they make me think and use new words that I never heard of, okay? I just want a medium coffee, okay? I don't want to learn your BS language, okay? So my advice to you is when you hire an advisor, which is huge, it's important, but you don't need to learn what an exchange-traded fund is. You don't need to learn what a buffered ETF note is, okay? You don't need to learn this, that, or the other, okay? You just come in and your role in the process is, listen, Alfie, I retired. These are my goals. This is what I need. This is how I want to live my life. You need to articulate those things to your advisor, and then your advisor becomes your co-pilot. So then, when the world looks like it's ending, you got someone sitting next to you and says, hey, listen, we all agreed on what it is that you want to do. While we were sober, and it was, daylight outside, we weren't, doing weird stuff on Saturday night. So they're there to kind of co-pilot you through this process, right? So that when we have days like yesterday or the past couple of weeks, you're not flipping out, because if you're sitting at home watching the news, they're trying to flip you out, okay? And you could make a bad decision because you're not thinking straight. So that's where the team comes in and helps you out, right? The do nothing options. Who watches soccer here? Anybody watch soccer? Good, man. Oh, red-blooded Americans. Play with our feet in a round ball. But, it's weird. I've got a lot of relatives in Europe, right? And what they're always amazed by? They're amazed by the fact that I can catch stuff with my hands. Like, they don't do that. They don't have any games where you actually you throw footballs around, throw baseballs around, there's basketball. They don't do that. They all play with their feet, right? So, which is kind of weird in and of itself when you say it that way, right? But anyway, I use soccer as an example. Like, the penalty kick, right, was almost 100%, right? They literally line up point blank, and the net is about as big as this stage. I don't know how you put 3 goalies in there, they still couldn't stop the ball, right? So it's pretty much a done deal at that point. But do you realize that, and of course this was some smart European academic did a study, and he found out that 1/3 of the time the ball goes to the right, 1/3 of the time the ball goes to the left, and 1/3 of the time goes down the middle. So we probably funded that study. But Mr. Genius European guy found out that a third, right? Makes sense. But then the other interesting thing that came to mind is, remember, we grew up and our parents told us, like, hey, don't just sit there, do something, right? Remember that one? Okay. Well, the goalie always doesn't sit there, he just does something. And guess how many times the goalie moves to the right or the left? 96% of the time, right? So that means if he just stood there, did nothing, his chances would increase practically 5-fold, because the ball would 1/3 of the time would go down the middle, right? And he's only going to guess right 4% of the time. So think about that. So that's the power of doing nothing and sticking to your plan. And again, what I would urge everyone to do is to say, look, if you're nervous, they're here to talk to you guys. They're here to listen to you. They're here to, explain to you why you did what you did if you need reminding. But the only question you ever need to ask yourself, honestly, or ask them, is, am I still on track for my goals? Okay? I don't know what a 9% annual return per year life looks like, as opposed to an 11 or a 7 or a 13. But I know that if I want to fund my grandkids' college fund, I can say, am I still on track for that? If I want to buy a second home, am I still on track for that? I want to build a llama farm in the Himalayas. Okay. Am I on track for that? That's what you owe it, right? So it's a two-way conversation. But you have a plan in place. You stick to the plan. You work the plan. And you also ask that question constantly. When am I on track? Am I meeting my goals? Okay. So that's the compliance statement, which I'll do my best Shakespearean rendition of, kind of like we did like Laurence Olivier. No, I'm not going to do that. Okay, I'm happy to take questions. Thanks for having me. I appreciate it. Love coming down here and seeing you guys. But yeah, I'm happy to answer questions.
You like coming down more in the...
I do. I like coming. I don't like coming down in July, I'll be honest.
Yes. Well, I do want to say that, Tom, you do this around the country, and people were saying you must have got a bunch of calls, and the reason why we don't get a lot of calls from when the market has been doing what it's doing is because the team that we have. I mean, David's been working very hard, Curtis and Garrett, they really when you call, do they get back to you right away? Yeah. Yeah, and that's it's an amazing team that we have. It's making my job easier. So we will take questions here. Let me see here. I did want to say that. And so you do have a favorite child? You really do? Okay.
So like my daughter, Angel, right? She's nice. She helps mom. She does. My son's like, I don't know.
Son's at West Point too, though.
He can't. Yeah, on paper, he's awesome. And you know, the frustrating thing for me is, you know, having gone there, is like you'd think that would be like a natural father-son bond kind of thing, right? Never tells me anything. And he claims that I just don't understand what it's like there. And that's the part that drives me crazy, because
you were there.
The place hasn't changed in 200 years. He's sleeping in the same bed I probably did. So that's the part that drives me crazy. But yeah, he's just his own guy.
All right, so I'm going to hand this to Kurt here, and he'll pass it around. You can ask me a question. You can ask Tom a question. Just
you're not allowed to hold the mic. He holds it for you.
Jim Acosta. Do we want to ask?
Oh, we got two. So we got another mic here. I like that. Tony, you weren't allowed to hold the mic.
Okay.
No, go ahead, John. Go ahead. You have a question?
Yeah, there was a time way back.
Speak closer to the mic.
There was a time way back, like in high school, the early 80s, when 10-year yields at the time, about late 70s, mid 80s, they were in the 7 to 15 range. In the mid 80s, I think they started going down and down and down and down and down. Never again to go up again. What caused that, or what caused those rates to be up that high? Was that a facade or what?
So the rates were high in that time period because we were experiencing, like, you know, the crazy inflation that we had in the 70s, right? You remember Jimmy Carter with the sweater, and he told you, like, you know, turn down the thermostat and all that kind of stuff. Well, we had some really, really horrible inflation, and when Volcker came in, who was the Fed chairman at the time, he came in and he just, you know, jacked rates up. And that was meant to do a couple of things. It was meant to bring inflation down, because, you know, stuff gets expensive, people stop spending money, they're going to, you know, not sell as much, so it's going to keep prices down. And eventually what happened was, when those rates got high, they issued a lot of debt and all that thing, but, you know, we persistently, because the economy grew and there was productivity gains and things like that, you know, rates steadily came down until we hit the financial crisis, which at that point they started doing all kinds of shenanigans at the Fed, right? Buying stuff, quantitative easing, keeping rates artificially. So that's been the game that's been the past sort of since 2008 till about recently, right? Till a couple of years ago, is they've artificially kept rates low. And what that allowed people to do was basically to fund a lifestyle that they normally wouldn't. We're more at natural levels now with, actually we could probably be on the 30-year, we should probably be somewhere around the 4.5%, 5%. The 10-year should probably be around 4%. Those are kind of more natural levels. So we're kind of there. But the frustrating thing is, I don't know that we'll ever get back to 10, 11, 12% yields again. If we did, that's horrible, because that would be a huge sign of distress. Because that basically means nobody wants to lend us money unless we give them a very high rate. So that was a once in a lifetime thing. And, you know, I'm fearful that the Fed might get back to those kind of shenanigans again. And, you know, the next time we meet, we're 50 trillion in debt.
Okay.
You get 15%, 10 years guaranteed.
Well, yeah, there was, honestly, I ran a wealth management unit back during the financial crisis. And, you know, I had some hard conversation, like grown men sitting across from me teary-eyed because their 30-year bonds were maturing, okay? 2009, that would have been 1979. They took out 30 years. And they were getting paid 14, 15, 16%. And they're sitting across from me, and I'm like, dude, I can't get you that kind of return in a treasury. It's going to be like 4%. I mean, could you imagine what life would be like if your net income.
I'm at the job.
Oh, sorry.
Tom has to catch a plane tomorrow.
What? I'm just telling them. It's not going to see it.
It's not gonna see it again. Okay, so I gotta keep Tom. He loves his mic. I gotta keep it from him. But we fly him in, so we want to hear from him. Okay, go ahead. Another question.
I generally view cryptocurrency like the Seinfeld show, a currency based on nothing. What's your opinion on that?
How long do I have to talk? So, okay, listen. I'm with you. I don't know what it is. I don't know whether it's a storage of wealth. I don't know whether it's a currency. I don't know whether it's a speculative security. My advice to people is, if you want to partake, take a couple of % of your net worth, and if you just treat it as if you're going to Vegas, and you may make out really well. But I also feel the same way with gold and precious metals too, right? I mean, to me, it's like, if the world gets so bad that you have to walk around with ingots of gold on your, like some friar in Robin Hood, you're better off buying guns and ammo and rice, right? To trade with, because nobody's going to want your little shiny coins if the world isn't that bad a place. So to me, it's like, you want to buy gold, you want to buy crypto, be my guest. Don't put more than 2 or 3% of your entire net worth in that, and play the game if it makes you feel good.
How about the people that lost their number?
Yeah, they lost their
Passport.
One guy bought a garbage dump. Did you hear about this?
Yeah.
One guy bought a garbage dump in England because he threw away his Bitcoin computer codes, and he was going to go through it hand by hand. This was like $180 million in that account.
Yeah. All right.
You got, yep.
Are there a couple of companies that you would recommend that might have the best chance of appreciating more than others right now?
Well, we don't do individual companies, so we're not gonna, when you say companies just in general?
Individual stocks, yes. What does Tom have?
Tom, do you have? I mean, he helps build our portfolio, so we have like the Advantage Edge, that we have companies in there that we really like, and the S&P 50.
Yeah, so just by training, I'm not a stock picker. I'm an allocator, okay? So what I do is I look at, where do I put money, right? Do I put money in the stock market? Do I put money in the bond market? Do I put money overseas? Do I put money large, mid, small? Those are asset allocation decisions, right? I don't really look at individual companies per se, because you really have to do a lot of research and stay on top of them. It literally becomes your life, right? So I don't do that from that standpoint. But what I do is I look at indices, and if I want individual companies from that index, like the S&P 500, so if we want to have, what I would do is I would run it through what we call an optimizer, and pick the 50 best companies that behave like the 500, right? But it doesn't matter to me whether one of those 50 is Microsoft or Intel or Tesla. I don't care. It's just which of these 50 behave like those 500, so I don't have to buy all 500. But that's one way of doing it. I think fundamental research is very difficult to do, especially if you're putting, But the other thing is, watch the news and the current events and see what kind of things. Like, my advice would be to people: who do you think would benefit from this administration right now? I would look at defense, energy, not green energy, not healthcare. Those aren't going to do as well, right? So I'd pick companies. I think the best people to do the best job of investing in individual companies are people that have a history in that business. Like, let's say you were an aerospace engineer. You would really know a lot of things about the aerospace business, and you would know when somebody says, we're coming out with a hoochie widget, you're like, oh, I know what that is. The rest of us don't, and then you would be the one to get in there, right? Or find someone who's in a business. But to me, I think it's very difficult to do that. We're not equipped for that. So,
no, that's cool. This was one of your questions that was sent to Mary. And Tom, this one you can answer. One big, beautiful tax bill. We're going to get that?
Well, we need to get that, because folks, it's one thing to play games in Washington, but please understand that if this bill doesn't get passed, all our taxes are going to go up next year, right? So, and we don't need it to be extended. We need it permanent, okay? It needs to just, the shenanigans need to stop. And all this nonsense that they keep spreading around about how it's helped billionaires, this, that, and the other. No, it's helped everybody. And the fact of it is when you cut taxes for someone who has $10 million, they're gonna get, the math just makes sense that it's gonna be more, right? But it doesn't mean that, you know, it's only going to the wealthy. It's just the wealthy are paying a little bit less, but so is everyone else. So there's that. The other part that's included in there that needs to be handled is just we need deregulation. We need to get the government off the back of businesses, and we need to get energy costs lower. Because one of the things that's keeping inflation right now really high is businesses are, besides the trade stuff, businesses are sitting there and thinking like, I can't count on dependable energy, right? It needs to be cheap, so I can pass that cost on, and that hasn't been the case. So
This was one about RMDs. So should you be taking RMDs when the market's down? Because if you go wait, it's obviously better to wait. Now, what you should do when the market is down like it is. Now, today's like I said, Tom, thanks for coming in, driving that market up today. Has anybody looked at the market today? Oh yeah, you're looking while we're talking? This morning, oh, it's up. Well, it was up back there, so hopefully it stays up. You know, we don't want it to be up and then like 10 minutes to 4, it starts to dive. So, no, I think it's going to be a good day. I think some things happen. Today, Tom, do you think it was more for what, Vance over there in China, in India?
yeah, I think it was a couple of things. So you know, you had Vance, and maybe then now there's potential. We need to see a deal, right? One of the problems so far that's been spooking the markets is that, you know, they don't know that these things, the tariffs are going to come back in 90 days, so forth and so on. So we need to see a deal. And I think that's what the market's sort of anticipating, is we're going to see something soon, and they're reacting to that. The other thing is Trump went pretty hard at Powell yesterday, wanting him to lower rates, and I think the market stepped back and kind of looked at it and said, is it really that big a deal? Because if Powell goes away, and because Trump wants him to, and he doesn't want to lower rates because Trump wants him to lower rates, guess what? The guy he replaces him with is probably going to lower rates, right? I mean, he's not going to hire someone who's going to be, a bigger rate hawk. So I think the market looked at that and said, I don't know that yesterday was all that big a deal, but we need to see a deal, and we need to just, these rates need to come down.
So, and China, I think that's the other reason I was reading that a deal is going to be probably within the next 2 or 3 weeks with China. So if that happens, you're going to see you don't want to be sitting on the sideline, which most of you are not, which is good.
The question was about the RMDs, right?
The RMDs. So the question with the RMDs, what you can do with the RMD, if you can postpone it a little bit when the market's down, or you can do, David and everybody at the team, we do Roth conversions. It's a good time when the market's down to do a Roth conversion if you're thinking about doing that. Now, many of you probably, if you're needing your RMD to live on, Roth conversions are not for you. But if you're not taking RMDs yet, a Roth conversion is something that you might want to consider. And we have the program to run if I'm sure we ran it for you. If not, we could run one for you to see if you're in that tax bracket that we don't want to do it.
Well, the other thing to think about the RMDs is, it's no different than anything else you're doing when you're investing. Dollar cost averaging, right? Nobody says that you have to take your entire RMD, for this year right now. Okay, you just take out a little bit, right, and pace it, and then that way the market, mitigates, and then we do get a rebound in the second half. Guess what? The RMD that you took a hit on maybe this month and next is the same RMD that you're going to take out, in August and September that may be worth a lot more and make up for it. So dollar cost averaging doesn't just work getting in; it's also getting out. It works too.
That's right. Okay, more questions? Raise your hand. Okay, we got one.
What are you thinking? Flat tax?
Flat tax.
I like it, but I don't think anyone's ever going to go for it because, you know, you got half this country doesn't pay taxes. So what's flat or nothing, right? And so we've got, I mean, but the point of it is that, once again, if you could actually implement a flat tax, you take away one of the most powerful arguments that the political elites have against people. They can't say, well, that guy doesn't pay his fair share. Well, if we all pay 10% or 20%, how fair is fair? I made $10, I paid $2, I walked down the street with my head held high. I made $20 million, you know, and I paid 20% of that. I can walk down the street. But the problem is they love playing these games, right? They keep saying that, you know, these guys don't pay. And I mean, what does that mean when they say something like pay your fair share? What the hell does that mean? Does anybody even know? But it's a mantra to get people that they're, you know, fighting each other, and that's what's frustrating. I would love if they did it, but I mean, they're not. You know, why would they give away? You know, it's like a baseball player giving away his glove or something or bat. It's sorry, but I wish.
What do you think AI's role in investing going forward might be?
So AI and investing, that's an interesting one, right? I mean, to me, I think I'm not a huge technologist in the sense that I don't think they do enough due diligence on how things, devil's advocating stuff. I think that's a challenge, right? I think what's going to happen is, you know, AI can be useful in investing and in answering a bunch of, you know, mundane questions and saving you time. But at the end of the day, I think the human element, you can't replicate that, right? So I look at the cell phone. They sold us on the cell phone, right? It's barely now that it's dependable, right? Remember in the 90s, you know, telephone, all that Gordon Gekko looking thing, and they were like, the thing didn't work for like 15 years. You dropped calls and things like that. So I always think the idea is always more grandiose than the actual reality. I think there's some, like, I'll give you a great application of AI. You buy a new car, it's got all this nonsense inside. I don't want to sit and look through the 400-page manual about how to dim this, that, and the other. So if you could hit a button and say, make this do this, the AI would be great for that. But do I want AI telling me, you know, when I can leave my house or what my temperature should be at home, or no. So for investing, I think you're still going to need a human being to make a plan, because I don't think AI can think for you in that respect. But it's a good data aggregator.
Yeah, I do think it's going to help get information faster. So, but I think you'll always need us, right, David? You got to look at people and really put the plans together. You could, you know, like for example, remember it wasn't 15 years ago the robotic advisor, right? Robo-advisor, and we're thinking, oh my God, this is the end of us. And really what happened was people want to see someone face to face, because, you know, when you call somebody and say, listen, this is going to be okay, this is just temporary, it will come back, and this is what we're doing. And you can't really get that with AI. So, but I welcome it, because if you don't welcome technology, you gotta use it. We use it. I mean, how do you use it, Curtis?
All the time, you know, just for day-to-day activities. I think for stock picking, things like that, you know, a lot of people are saying, you know, doing a lot of the fundamental analysis, you know, it helps a lot.
Yeah, so it's gonna be, I think the CFAs are gonna be able to use it. Now, I'll tell you who I would be afraid of, what profession, a radiologist. The doctor, I play golf with a lot of doctors, and a radiologist, you're not gonna see them anymore, I don't think, because they can read that chart faster, AI can read it faster, catch it faster, and you're starting to see that. And I'm having doctors telling me this. So it's not just me, but there's gonna be professions that it's gonna definitely hurt, and then there's professions that's gonna help. Okay, any more questions? Are you guys ready to get this beautiful sunshine? We got one back here. Go get him, Alex.
My question is, you said the biggest, I guess, weight on this country is the debt. And then on one hand, you start talking about the big tax plan. What, in your eyes, do you see in that budget proposal that's going to be able to eliminate some of the worries about adding debt to the already spiraling 36 trillion, and without affecting people like us that need Social Security and Medicaid and things like that?
Yeah, so that's the devil, one of those devil in the detail things. I mean, they've agreed to proceed. I don't know what they're going to come up with at the end. I would love to see, first off, some efficiencies. Yeah, a balanced budget would be nice to start, right? First thing. I don't think that, here's the conundrum. It's kind of like the flat tax thing too, right? It's like when you start talking about reforming Social Security and reforming Medicare, all of a sudden the other side jumps out and says, they're going to cut it, they're going to cut it, they're going to cut it. And no, you don't have to cut benefits, but you can make it more streamlined. There's ways to do that. There's a ton of ways. There's a ton of people that shouldn't be getting it. They keep expanding. The other problem is when you look at stuff like Medicaid, for example, they keep expanding that thing to people that, they've created universal health care without creating universal health care, right? So those are all the kind of things that, they all need to be looked at. We take in plenty of money as a government to pay for everything that we've agreed to borrow on and pay, right? All the obligations. But we need to stop spending more and more and more because that mountain just keeps getting higher and higher and higher. So I don't know short answer, I don't know what's in that budget that's going to cut this. But we need to. And it doesn't mean you have to work till you're 80 to get Social Security. You could structure it so that maybe people behind us, maybe work an extra year. I mean, there are ways to do that, but you have to have the courage to do it. And I don't think anybody in Washington that lives on a 2-year re-election cycle cares about the long term. And that's what's messed up about it. Man, going to Washington used to be like a jury duty. Nobody wanted to go. It was like, shit, I got a farm, I got a family, I got stuff to do, and why do I have to go down there? And you went there and you did your thing for the best that you could, and you come back. These guys live there their entire lives. Their career, that's their job. And it's a mess. And that's all I'm saying. I mean, I wish I could. I wish you and I could sit down and probably figure it out on the back of a napkin in a half hour. But they won't do it. So.
Any other questions before? Yes.
What do you think about the DOGE program that's going through in general, and what it specifically and how it's being implemented?
I'm going to say a couple things, and then I think there's a lot of waste. And don't you want to find some of the waste that's out there? I mean, if you're not doing it, you're having an audit on the government, which is pretty darn good. And what I laugh at is this: you can like Elon Musk or not, but is he benefiting from this? His net worth has gone down probably 40%, 30%. He's not doing it he sees it, he sees a problem. And the problem is spending. We got a spending problem. And there's a lot of waste out there, and if we can find some of it, I would say, why wouldn't you want to find that? So I think it's good. That's my opinion.
I'm a little, disappointed because it's not as easy as we were sold with it, right? I mean, there are some high-profile stuff, like Sesame Street in Iraq, and all that kind of nonsense, right? You see that stuff, but I'm amazed at how entrenched the powers that be are, because that's their livelihood, right? And I'm saying, if I was coming for your job and for your department and for your company, you'd fight me tooth and nail. It's just the way it is. But the problem is that it needs to happen. It's just, I think we're spending too much time worrying about the personalities. And we all need to agree, because you got these people that are out there beating drums and singing and dancing in front of the Capitol. And what are they supporting? Keep wasting and keep my fraudulent, wasteful government going the way it is? That doesn't make any sense. At least if you could just say, look, let's all agree that it's too bloated. It's too, it's too cumbersome. It needs to be streamlined. Okay, you may not like the way Elon Musk goes about it or the way Trump talks about it or whatever, but at least come with solutions. Okay, dancing on the Capitol steps and singing about Elon Musk being a fascist isn't going to make this work. So people need to understand. I mean, I tried to renew my the TSA thing, whatever it is, right? The global entry. And I think I messed something up on my application. Good luck trying to get somebody on the phone. Like, who the hell are these people? Or the IRS or any of these people? Like, your government's supposed to work for you and it's not, and yet it's swamping us. So, to me, it's like, again, you can disagree with how it's being done, but I wish we would start from the premise of saying it needs to be done as part of that problem of, hey, getting that budget under control. Because you know what, could justify anything.
All right, we got one last question, and it has to be a good one.
Positive. Come on.
No, we don't. You don't have to ask the question. You guys good? I just want to say thanks for Tom. Thanks for coming, and it's always very spirited, and I like you bring it to every time, and I love it because a lot of people won't do this because it might not offend people, but this isn't here to offend anybody. This is just either you think one way or the other. But one thing is we are wasting a lot of money in government, and two, we do need to get the debt down, and three, these tariffs. If we can get some deals going, I think we're going to have a robust second half of this year. I really do. I feel it's going to be, and you felt it too, and I really think it's going to be good. So I want to thank everybody for coming, and we'll, Mary, anything you need to say?
Thank you, everybody, for coming. It's great to see you.
Yeah.
And we'll stick around.
Yep. Okay, guys. Thank you.